Hi guys, and welcome to the sellerboard show. My name is Vladdy Gordon. Today I'm joined by Nathan Evans from fulfin.io, and we're going to talk about the money. As you guys probably know, selling on Amazon is a pretty capital intensive business. So sometimes sellers run out of cash, which they need to finance their next purchase. Especially if you're growing, you need to buy more and more inventory. You need more and more money, right? And it's kind of hard to finance that out of your cash flow. And we discussed different options where you can get the money. For example, you could get an investor or go to a bank or go to a fintech like fulfin. And Nathan told us about their process, what's important for them, and what your risks are, and how long it takes to get a loan from them. What are advantages and disadvantages compared to other sources of money? If you're interested in this topic, they're active in Germany only. As of now, November 2019, they will expand internationally eventually. But for now, it's Germany. So if you're selling in Germany, it's definitely relevant for you. We have some special deals in the description. And before we start, if you don't have a sellerboard account yet, then go ahead and check our free trial. Sellerboard is a profit analytics software for Amazon sellers with a free trial in very competitive pricing. So make sure you check it out. We have a lot of bonuses in every package, even in the smallest package. You get some other tools just as a bonus in addition to our profit analytics. And now, don't forget to subscribe to our channel, press the like button, and let's start the show. Hello, everybody, and welcome to the Sellerboard Show. My name is Vladdy, and today I'm joined by Nathan Evans. Hey, Nathan.
Hi, Vladdy. Nice to speak to you again.
Thanks for joining. Thank you. So, Nathan, you have a cool accent. Tell us, where are you from?
Thank you. There's not many people who say it's a cool accent. It's actually a Northern English accent from Derbyshire.
Okay.
One that my young daughter, who's grown up in Germany, has inherited, even though I tried to save her from it.
Nice.
Yeah, it can be difficult to understand, so I'll try to speak slowly and clearly for everybody's benefit.
But I find it very nice because I mostly speak with like Germans speaking English, or people from all over the world, or Americans. But it's nice to have you on the podcast, and we'll have.
I tell you what, then I'll do something just for you. Hey up, me duck, would you like a cup of tea?
Okay, there was something about a cup of tea.
Exactly.
I almost understood. Okay, so Nathan, tell us about yourself. What are you doing, and what's your role in this global Amazon community?
Yeah, wow, what the big question to start with. So I'm the co-founder of fulfin, and we're a financial partner for e-commerce merchants. I founded this company in 2018 with Freddy, Dr. Alfred Gruber, to give him his full name, but he's our Freddy. We both have a background in either deep financial services and structuring, or in my own case in fintech, as well as finance and e-commerce. And we came together a little bit on the fintech wave. And when we were looking at all of the possibilities that there were now to offer bank independent financing and founder friendly financing, we were looking for the right area where this could make sense for us. And very quickly, we saw that e-commerce per se, and certainly with the Amazon megatrend, it's a massively underserved area as far as financial products, especially loan products, are concerned. And we decided there was a need, and that we wanted to meet that need. We thought we had enough understanding, and then we dived into it in 2018. And we really dived into it and immersed ourselves in it and tried to understand the needs of the market and the needs of sellers, and to basically build our product to best serve them.
Mm-hmm. So tell me, what was like the first time you encountered this Amazon selling on Amazon topic?
I think probably, everybody knows that has bought on Amazon even now for years. I think 2017, really, in the sense of a seller-driven business model, That's when Freddie and I were working in a previous fintech together, and not all, but some of our customers then were online businesses, and some of them were hybrid businesses with B2B and online, and some were offline. And we noticed that our ability to perform risk analysis and to understand the business models of our online customers was far greater than it was with offline cases, because we had up to the minute irrefutable business data from these cases. So that was very attractive to us. And we also saw, because it's such a new discipline and it is so fast moving, that the other players in the market, be they banks or even be they other fintechs, they were just lagging behind. They weren't using the resources and the tools that were there to be able to make a great offer to online sellers. So that's when we kind of zoomed in on this.
Mm-hmm. Okay, I understand. So tell us, like, what is the problem that you're solving? If I'm an Amazon seller, I mean, why would I want to call fulfin?
The problem that we're really solving is that there's no founder-friendly capital out there. So people certainly can get some financing from a bank, and we always advise our guys to the best of our ability to get this very base level of working capital financing from whatever bank or whatever subsidized program that is, be it KfW or their local Raiffeisen bank here in Germany. Mm-hmm. But then really the best sellers out there, or even I'd say the good sellers out there, they're growing so fast, these business models are capital hungry. They need a great amount of working capital because it relies on buying goods and importing these goods, selling them on the marketplace, and then waiting for Amazon to pay you. And that's what is termed a cash conversion cycle. And when the growth is so strong, it outstrips your ability to grow out of retained earnings from the profit you make. So you need external capital. And we don't think that just for the purposes of funding your product purchases or funding your business operations, that you really should have to go to an investor, so an equity investor who buys into your company and lose ownership of your company. We think this should be a loan product still, and that's what we do. We offer a product where we are not an investor in your company, but we're a financing partner for your company, and we do a project with you. Generally, that is a purchase of goods, but you can still use our loan for general operating purposes, for marketing, or for launching a further products going into different markets. And at the end of this project, we receive our capital back and we receive our fees back. And you're happy because you've grown your business with our money, and we're happy because we've made an appropriate financial return. And then you're especially happy again because your company still belongs to you. Yeah, you haven't given up any equity.
Okay, I understand. So look, let's. I have a lot of questions about every aspect of this, but maybe let's start with different financing options. So suppose I'm an Amazon seller. I understand, of course, you need some capital to start. Normally, sellers tend to start lean and very like without too much money, right? Because it's a risk. But at a certain point, if you see, okay, product picks up, okay, you need capital. So after you maybe borrowed some money from your parents and friends, and you can't get any more, but you do need more. What are the options in general? So you mentioned going to the bank.
Yeah.
What else? Like, what else can you do?
So I just got to pick up on your point about people starting with very little. I think that's wonderful. That's why we do what we do as well. I'm particularly inspired of one seller I think of who told me he started with something like $170 in drop shipping, and he managed to set something up, make a little bit of money, then bought his first product to bring into FBA, and he's building now. And this guy's started with nothing. He doesn't even have family and friends who could lend him the money. He has no track record or no real credit history in Germany. He's not bankable in that sense, but he works like a dog, and he's intelligent, and he's getting there, and it might take him a little bit longer. And it's wonderful that is possible today in this retail e-tail environment. You can start with almost nothing, we want to kind of democratize the next stage as well. We want to make it possible that as quickly as possible, when you need capital to scale, that we can be there and offer you this. The alternatives that you have, they're effectively like any startup in many ways. Yet fools, families, friends, as they say. Great options, especially if this money comes as a loan. Personally, I find it less attractive if you have to take in investors into your capital structure of the company. You have to be very careful with that. But if your parents can give you a loan and they're prepared to, that's the best place to start. You're probably more diligent with that money than anybody else's money as well. Then free money. In every way, shape, and possible form. If your business qualifies for some of the many subsidies that there are in Germany, especially I speak from this position at the moment, then you need to go and get it, because these subsidies are non-dilutive, and sometimes it would be a Zuschuss, additional contribution to your own expenditure. It could be a particular program. For example, there's something called Exist, which helps young students start as well. That's perfectly valid if you have that background. We actually have a contact from our network who specializes in advising young entrepreneurs generally, young online entrepreneurs on this. So if anybody's interested in that particular form of financing, then they can just hit me up and I'll put them in touch. And beyond that, it's really banks and investors. And the problem with e-commerce per se is it disqualifies itself in many ways for classical VC companies. And it also disqualifies itself in some ways for business angel investors as well, the early stage. So we know e-commerce companies find it particularly difficult unless that model is particularly a brand. If there's a brand there or there's some particular innovation, then you might get a VC or a specialized business angel to come in. And if not, e-commerce entrepreneurs have to fund in a different way. The last thing I think that completes the picture is then the offers that come from different fintechs out there. And there are lots of banks out there, many banks. And in the meantime, there's also many different fintechs as well. We have healthy competition, which we love as well. And some of these have more relevant products and some of them have less relevant products for e-commerce entrepreneurs.
Okay, I understand. So let's talk about investors for a second. You said you wouldn't recommend it. So why not? I mean, like, investors sound like, okay, I mean, free money, if you get a Zuschuss, like you said, that's wonderful, of course. So, guys, go check out what's possible in your state or in Germany. There are a lot of possibilities. And that's wonderful, of course. And family and friends is kind of intuitive. But like investors, you say you wouldn't recommend it. I mean, it sounds like a good deal, right? So there's some guy who gives you money basically just for your idea, or maybe a little bit more than idea, and they kind of share the whole risk with you, right? So you don't need to pay it back. So why is it a bad idea?
So, I mean, I must be careful not to sound like a hypocrite here, because we recently closed our own seed investment with a large and well-respected German VC. And we took in a 7-figure amount of capital, because that's necessary for us to grow our business. We have large projects that we need to do with banking partners. We have a lot of legal as well. That's what fintech is about, really. And there's no way we could do that without investors. Investors, for these purposes, there's no way around it, and they can aid you and support you and make things possible. Investors, for the purposes of buying product to sell, if you go that way, you're taking the most expensive type of capital and funding that there is available. You're giving up ownership in your company. And I'm not saying that it's always a bad idea, but if you can find an alternative source of capital to do that, generally it will be cheaper in both the short and the long run.
So it's kind of more capital effective. You get more ROI, or it's an ROI. It is definitely an ROI game. If you're growing and your company is becoming worth more and more every single time, if you can fund your operations in a way without giving up equity in that company, why
why would you?
Yeah.
And that's certainly the way to look at it. If an investor brings something else to you, some sort of competency, some sort of connection to a particular supplier, then fair enough, you might consider it on that basis alone. But one needs to be acutely aware of the different types of capital. And then if you are going to get in bed with an investor, I think it's important not to have too many investors as well, to have some awareness of not ruining the capital structure of your company. Loans are very easy. So long as you are not conservative, but let's say a reasonable businessman in terms of the loans that you take. And obviously you have to make sure that you can pay your loans back out of the cash flow that you generate. Then it's wonderful in many ways, because you do keep ownership of your company. And then once that loan is repaid, you have credit history, and it's gone. No, it's effectively you have no liabilities to anybody anymore, and you've grown your company and moved it on.
Okay, I see. So, all right, let's suppose we want to take a loan. I can go to bank, or I can go to fintech like fulfin. I guess banks are there. They have been there forever. They're very stable. Like, why would anybody want to go to a fintech rather than to a bank?
Speed, experience, understanding of the business model, and product innovation are basically what it comes down to. So the process at the bank is drawn out as well. It's certainly not the quickest, and you need to consider this in the cost structure as well. You may be tied up with these people for days, filling out forms. In the worst case, it will definitely be kind of that classical go into the bank offline, meet the advisor, run him through your business model, which he clearly will not understand, and then receive an offer from them that will be for a large amount, which it will need to be as well, to make it work with their own cost structure for a longer period as well. But if you're in the position where 50, 100K is going to help you, then definitely go to the bank, because it's one of the cheapest sources of capital that you will get. Make sure you get the best deal, and probably be a little bit more conservative and take in a little bit more than you need if you can. Where banks are very inefficient, we've noticed, is in being able to react quickly to seasonal needs for capital, for varying for capital. So that's how we conceptually see our product, that we love our sellers to have a basis with a bank. We know that they have their seasonality, and that they come to us for 3-month financing, 5-month financing, 6-month financing. They come to us for a loan that they take today, and they start paying back in 3 months, as opposed to straight away. And then they pay it back for 6 months. And then, as we said, and then that loan is gone. Whereas once you go to a bank, generally you're talking about a 3, 5, 10-year engagement.
Okay.
Or if you're talking about a credit line with a bank, then you really have to be careful how the fee structure looks as well with that bank. Often we've heard of cases where the bank will give credit lines of up to 50,000 without any fees. And then the second that the customer goes above 50,000, they have 2,500 of what's called in German I think it's Bereitstellungszins. So I forget the English expression for it now, but fees associated just with having the possibility to use the line, whether you use it or not. Yeah. And that can be inefficient. So if you need 50,000 for most of the year, but for 2 months of the year you need another 20,000, then you don't want to go to a bank that charges you for, to have 70,000 for the whole year.
Yeah. Okay, I understand. Okay, so you're kind of trimmed or optimized for e-commerce, for this short cycles, because you understand, okay, people need to buy products in 3 months, or in 2 months the goods arrive and they're starting to sell them off, and then maybe 2 months later, or I don't know, maybe 4 months later, the whole batch is sold, and maybe they'll need another portion of capital. I understand, and you also mentioned efficiency. I can I've actually don't have a lot of experience in talking with banks, but I can see that probably it's going to be hard to explain them all the FBA fees and the process of shipping goods and pre-ordering and quality inspection and so on. And what banks don't understand, they tend to price higher.
They have to. I mean, it's
Mm-hmm.
they're doing their job. The risk is uncertainty.
Mm-hmm.
Uncertainty is lack of knowledge, and you have to price risk. So if they are not sure what your revenues are going to be, but more directly, they're not sure what your revenues are because a bank does not look at your e-commerce data like we look at it. With us, that's all automatic. We take the Amazon reports, and the second we talk, I know what your sales were yesterday.
Mm-hmm. Mm-hmm.
And this transparency helps us to give you a very competitively priced product, but a perfectly structured product as well.
Yeah. Yeah, I understand. Probably the bank takes your tax statement from the previous month, or something like this. And okay.
I mean, as we do as well, or we ask for it because there is some information in there.
Mm-hmm.
And we have the policy effectively, everything that a customer shows us helps build up our understanding of the business, helps us offer a more competitive product.
Mm-hmm.
But it's very naive of the banks to ignore the most useful and insightful and up-to-date source of data, and that's the e-commerce reports that come out. I think you expressed it perfectly. I'm going to have to ask, can I steal that, please? Like optimize for e-commerce. Mm-hmm. I want a new banner with that because that's exactly what we are. We're optimized for e-commerce.
Okay, so tell me, suppose somebody wants to become your customer, or somebody needs some cash. How's your process, and how quickly can I get the money?
Okay, so we're just in the release phase of our platform. So currently, somebody would come to our website, they would register on our form, and we will be back to them within 24, absolute latest 48 hours, with initial information and a process and an onboarding. In the next few days, we will actually launch the version of the product. So probably by the time this goes out, that process would be that if somebody's interested in the financing, they can always still come and have a conversation with us before they register. But if they want it to be as quick as possible, they can register directly on our platform. They can connect their Amazon account. They can submit the details that they want for their financing, and we will analyze that and turn it around in the vast majority of cases within 24 hours.
Wow.
Yeah.
Okay, and suppose we have a pretty easy case. We have an understandable product, and I don't know, maybe one with some sales history, and a decent amount of money. Will not to, I don't know, not 1 million or something. So when would you say a seller can get the money on their bank account, or how many days after they have initial contact with you?
Well, what's interesting with our product is that we've set it up specifically not to be something that's called like a Warenfinanzierung in Germany, so not to be a product financing or purchase financing. You do not have to use our money directly to buy the goods. So the way our flagship product is set up is it's a collateralized loan, which simply means that you need to give us your goods as security for our loan. Often we are working with sellers who are already working with 3PLs, third-party logistics providers, using them for storage before their goods are sent to Amazon. And if that happens to be one of the partners who already works with us, or a partner that very quickly confirms that they're able to work with us, once that risk analysis is done and the contract is signed, including a pledge of the products to us, we can effectively pay out within 2 to 3 days. So basically our prerequisite for paying out is that for our flagship product, that the loan is collateralized. If those goods are sitting in the warehouse already, as soon as that agreement is signed and we have that confirmation from the warehouse provider, we're happy to pay out.
Wow, that's nice. That sounds very fast. Okay, I understand. So you mentioned you need the goods as security. So this basically means I'm getting like you're paying for, if we are talking about products, you're paying for the purchasing, right, for the buying price, but you keep the goods until I sell them out. Is that, or until I basically pay you back? Is that
there's one little correction I would make, which I think is very important to differentiate us from some of the other fintech players. We don't give you just the purchase price. We're actually less concerned about what these goods cost. I mean, we think it's wonderful if you buy them for 1 and you sell them for 10, then we're happy for you. But that purchase price isn't really relevant for us because these goods serve as our security. What's relevant for us is the sales price. So we can generally give you a multiple of your purchase price. That certainly, let's say 20 to 30%, we think is a very reasonable loan to make. And with that amount, then you can fund not just the purchase of your products, but also the import of your products and potentially the first marketing of your products as well.
Okay. And what's my risk? Like, I mean, of course, if I go to an investor, it's a very long-term story, but probably there's no risk. Like, I don't risk my own home or my car or whatever, right? So is the inventory the only risk I carry, or do you need some other securities?
So generally, we have a loan contract as well. So that is a legal obligation for the company or the individual to pay us back. Many of our customers currently are what are called sole traders, so Einzelunternehmer in Germany. And then purely by the legal definition, an Einzelunternehmer is personally liable for the loan. For GmbHs, so German limited companies, we do generally, like many fintechs and banks, ask for a personal guarantee. We obviously that is personal liability, but we're very clear in our communication here. We're not here to provide capital to you that could get you into trouble. So part of our product and how we differentiate it to some of the other competitors is that we work very closely with our sellers on a loan sizing. And we're looking at your disbursements from Amazon. We're looking at your other sources of income and cost. And we're making sure that this loan is repayable. The products are certainly our first line of collateral. So in the event that for some reason we were not paid back by a seller, I would say who can't pay us back, then we have a right to take these products and to sell them to receive to generate the cash to pay our loan back. To give you an example of a case where this has actually happened with one of our customers, the reason that he couldn't pay us back was because his Amazon account was blocked, and he found it very difficult. And obviously, we know the story as well, to get this unblocked. So in this case, we did indeed take the products into our custody and we sold them. But what we did was we sold them and we took our loan capital and our fees, and we paid out the balance directly to our customer. So in that case, it was actually a service. And because we don't over leverage, we don't give 100% of the sales price as a loan, for example, because that way we would never be able to get the money back. It's pretty much inconceivable for us with the product due diligence that we do, that if there was a default event where we were not paid back, that we wouldn't be able to recover the full funds from the product. We always work with the sellers as well. We don't work against the sellers. We understand that these things unfortunately sometimes happen, but we do a lot of work ex ante in advance of the loan to make sure that the product is the correctly trimmed product, as you said, optimized for e-commerce. But we optimize it for the seller.
Nice. Okay, so guys, I think you shouldn't. It's in general probably a good idea. You shouldn't get a loan if you're not sure if you can pay it back, because otherwise it's too risky. But if you are sure, then I guess there's also not too much risk, right? So your product is your security, and of course, eventually you have to pay the money back if everything goes wrong. But that's the life of an entrepreneur. But I like your idea of working together with the sellers and even providing such services. That's very, very nice.
Oh, sorry, Vladdy. If I may say, I think a lot of the danger comes in when people don't know what they have to pay back, and they're unaware of what comes. And that's why we believe and we live a total transparency. Our offer is tailored exactly to our customer. That would mean the number of installments that he requires, when those installments start. And in advance, it is perfectly clear when those repayment days will be and how much those repayments will be. And it is also perfectly clear to us as financial professionals that this loan can be paid back from the business. We are not looking to be paid back from the product. If that happens, then we see it as a failure on our side. The mechanism is more there to protect the seller's interest in the case that something happens, like at the Amazon account being blocked.
Yeah. Okay. Got it. Cool. Look, tell us, do you have a special deal for us?
For you?
Yes, for
you?
our we don't sell ourselves, but we have a lot of customers who are selling. So maybe we can get them a good deal in case they are interested in becoming your customers.
So what we really like and how we're positioned with our offering is that we want to be there for good sellers who want to build solid businesses. So we love a product like Sellerboard. I mean, we use it ourselves in our analysis, and we've taken a lot of inspiration from it as well, because we need a risk management view. And we know that guys that are customers of yours, they are doing some sort of financial controlling themselves. They're not how do you say it, right? They're not being cowboy with their business, so they have the best tools possible to make sure that they're going to have a solid business, and that makes them very attractive customers for us. So we're certainly very, very happy to recognize that with a special offer, and we extend an offer of 2 months free financing to any Sellerboard seller at the moment.
Nice. So how can they get this offer? We'll post a link in the footnote, but maybe for somebody who's just listening to this, what's the URL, and I know how to get the offer.
So if they just come to fulfin.io and they register on the account, and then in the onboarding process they simply give us the code that we will include down here below. And if that doesn't, and if for some reason they forget to do that, simply at any time before we prepare the contracts, that they let us know that they reference this interview, then that's fine. Then they'll automatically qualify for the offer.
Nice. All right. So the code will be in the description. So guys, make sure you check it out. You get 2 months of free financing, right? So you just don't pay nothing for the loan for 2 months.
So you don't pay anything for 2 months of the loan. So we will calculate our loan, and we will take 2 months of those fees, and we'll wipe them out for the first trade for new customers. And we'll make the code nice and simple. We won't make it supercalifragilisticexpialidocious. We'll make it a little bit shorter.
Nice. Okay, so look, thanks so much. I think it was very, very interesting. Before we wrap up, tell me about Seller Barcamp.
Yeah. There's a little poster somewhere in the background of me as well. This is something that's very close to our heart. This is something that means that both Freddie and I and Timo, I think, who we're organising this with, are probably sleeping even less than we do normally, because it's an event series that we've taken it upon ourselves to organise. But I think it's like with both of our business models, ours as a provider of capital, and Timo with Dragonflip as a provider of a platform via which to sell e-commerce businesses. We noticed also within the event space there was something missing. We saw the popularity of the forums and the blogs, and we see how quickly Amazon is moving. And we know the knowledge isn't really centered on a few influencers. It's dispersed amongst the community. Mm-hmm. And we figured out what we really wanted to do was create an event with a special format, with a unique concept where we have no speakers, no predefined speakers. We bring together sellers, and that you have to be a seller to qualify for this event as well. And in this event, everybody has the right to present, and everybody is asked to present a topic as well. So right at the start of the event, we have a a little bit of a round robin that everybody's introduced, and then we have a mini pitch where people come up and say they can talk with a level of expertise about this problem within Amazon. And that could be anything from creating the perfect product photos to listing hacks to PPC to logistics topics as well, or financing and working capital topics. But it's very interactive. So then the sessions, the event, the whole community, we have between 100 and 200 sellers normally attending, all break out into mini workshops, and you can go and find exactly that topic that's right for you.
Nice. I think I can add to that I like the concept very much. I think it's very fair and priced very fairly because most conferences are very expensive. And also this like interaction with other sellers and this user-generated content, it's kind of cool because I find it sometimes hard to sit in a conference for like 9 hours or 8 hours and listen to
Tell me about it.
And so I hated it all. After the third one, I start to go out for a break every 15 minutes and just chat with somebody. And with Seller Barcamp, I like it that it's very dynamic. You can also you can pick a session you're interested in. You can also stand up and go to another one if it becomes boring or something. That doesn't mean you don't like the speaker. It's just you use your time differently. And I've been there 2 times, and I can recommend it to everybody. It's a lot of networking going on, and this is, for me at least, as important as the content itself.
Yeah, we hope to see you again. I mean, I think people are always very keen to hear yourself speak with the expertise on your topics. You made a very good point, and I should have said this as well, that the event is bootstrapped. So don't come to us if you're expecting like a 7-course conference banquet at the end. That won't happen. We keep the costs low. We sponsor the event ourselves with Dragonflip and organize it, and we have support from different organizations, yourself included, who help us in many ways and also make the event possible at a fraction of the cost of these other conferences, where it's a fraction of the cost, and I say a multiple of the learning. So what's not to like?
It's nice. Look, we're now in November 2019. I know you're going to have 2 or 3 more next year.
We have 1 more this year, actually. So we have one in November. If this goes out before, on the 20, I believe it's 22nd, Friday in Cologne. And then we follow up with the next one is our home game in Munich in February. Nice. So we'll put a link below so you guys can check it out. Click on the link and just see what's the next Seller Barcamp. What we'll do, Vladdy, is we'll put a special offer down below as well for anybody who wants to attend one of the Seller Barcamps. That's nice. Okay, guys. So if you want to go, then make sure you check out the offer below. Nice. Thanks so much. Hey, Vladdy, it's a pleasure. Thank you. Thanks. So then if you guys have any questions to myself or to Nathan, then make sure you comment this video, and we're going to let you know, Nathan, when there's a question, or we can try to answer it ourselves, or we do both. Guys, don't forget to give us a like if you like this video and subscribe to our channel. And Nathan, thanks for coming. Yeah, thank you very much. It's an absolute pleasure. We're big fans of the product and what you do, and also even your pricing of the product, that you want to get that advantage out there to as many sellers as possible. It's very, very close to our own philosophy. You're a very genuine person. Lovely to speak to you. Look forward to the next time. Thanks so much. See you guys. Bye-bye. Bye-bye. Thanks for watching. If you like this, press like, comment below, subscribe to our channel. And if you don't have a Sellerboard account yet, then go ahead and check our free trial at sellerboard.com. Profit analytics for Amazon sellers with a lot of extras in every package. And we're priced very fairly and very competitively. I bet you won't find a tool with a more competitive pricing than Sellerboard. Guys, see you soon, and good luck. Bye-bye.